Yo, what is going on YouTube? I am Germ here, as you guys can see up on the screen. Today I wanted to talk about Sofi Technologies Incorporated. Once again, this is ticker symbol SOFI, and today was a good day for Sofi. Kind of a weird up and down day, where we started out in the green, hitting all the way up to 925, before then going red on the day, all the way down to 886. I mean, this is kind of a crazy swing just within a couple of hours, but then the entire market just kind of turned things around midday, and everything started doing better and better, and Sofi followed along that track as well. Again, closing the day up right around 2.5%, 2.66%. After hours, pretty much flat, down 0.86%, but I wouldn't read into what's going on after hours all that much. When you compare this to the rest of the market, Sofi had a good day. Dow Jones is up 0.27, S&P up 0.7, Nasdaq up 1.3, Russell up 0.0037. So a green day in the market overall, everywhere you look, but not a crazy green day, not a significant green day, not anything, insane. And Sofi outperformed all the major indices. So overall, I would call this day a very, very nice success for Sofi, and it will be interesting to see how they're able to hold these gains for the rest of the week, and if they're able to continue to outperform all the major indices. But in this video today, we're going to be going over all the latest for Sofi, the company and the stock, and I'll be giving some of my thoughts and opinions on the story. So definitely drop a like if you guys do enjoy it. Make sure you subscribe to stay up to date on all my latest content. And of course, as always, there will not be any financial advice in this video. I'm not telling you guys to buy, not telling you guys to sell, nothing like that. Just giving some of my thoughts and opinions. With that being said, let's get right into this one. So again, very, very good day for Sofi today. Over the past week, though, it's looking a little bit more rough, down 0.334%, and year to date, of course, it is ugly, down 41% still. This is insane. Again, we are not even through March yet. This is not even 3 full months in the stock market, and we are down 41%. Less than 3 months ago, this thing was 1568. We're sitting at 925 on close today. Getting into some of the stories. The number one meme today, obviously you're seeing it everywhere. Chris Rock, Will Smith, the slap heard around the world, but this is Sofi. Bank charter, Super Bowl, NFC Championship game, member growth, Galileo, and Technesis, billions of dollars in advertising, impressions all over the place. There's so many articles being written about it. Everyone's talking about it. It's going from a company that many people had never even heard of to now one that is becoming a major player in a lot of different markets. They have just a massive suite of products and offerings and all these things. Yet here comes, the slap from one threatened Bank of America analyst. It is really, really crazy how much these analysts are able to affect the stock price in the short term. Now, I will say, I don't think that these analysts, downgrading Sofi or downgrading any company would matter as much as if we were in some massive bull market, or if the stocks were just going up and up and up every single day or every single week or every single month. I think that, yes, these analysts obviously do affect some people, and they do affect the market and the stocks to some extent, but I think we're seeing exaggerated, kind of movement of these stocks based off these analysts when the market's just not doing well overall. Again, you saw they're down 41% in the last 3 months. It's been a rough couple of months, not just for Sofi, but for the entire market. So if people get any kind of reason to sell off, they're going to start selling off. People are getting hit with margin calls. People are already, kind of wishy-washy in stocks in general right now because they think things are going to keep going lower. They're scared about X, Y, Z, a million different things. They want to be able to buy the dip. They want to be able to get in at better prices. So just kind of all these things at play. I don't think the Bank of America analysts or any analysts really have that much of a say, because at the end of the day, what do these ratings even mean? When the stock market's going up, they push their ratings higher and higher and higher, and when stocks are going down, they lower their ratings lower and lower. I mean, it's really kind of the opposite of what you'd even want to be doing in most cases in investing anyway, which just makes it kind of funny. But yes, good meme. This was at the top of the subreddit today, so I thought that was pretty funny and a good way to start the video. We have this. This guy sent an email to IR to see if they plan to disclose members per segment. So he said he's been trying to find a way to calculate those numbers, but figured he was going to check with the IR in case I might have missed something. He sent them this. He said, "Hi, I was wondering if member breakdown into segments was ever made public. In the 10K, you provide a breakdown of products into segments, 1.08 mil lending, 4.9 mil financial services, but I haven't seen a breakdown into members. Yes, some members would be counted twice. They have a loan and part of the financial services. Is it possible to get this?" And pretty much they said, no. We do not disclose members by segment or product type and do not have any plan to start reporting members at that level of detail. You are correct that it would create a lot of double counting given the high level of cross-buy buy among existing members. More important measure of success is number of products by member, which we update regularly with the public and investment community, which has increased from 1.1 to 1.5 since 2020. So there you go. That is a statement from, I think IR stands for Investor Relations. Yeah, kind of interesting. Yeah, I mean, yes, it would be cool to see those different numbers, but yeah, the numbers would also be pretty confusing. I don't know if most people would understand them at first look. And yeah, like the guy said in the response that the number of products by member is it's just as useful of a tool, and one that Sofi has been more regularly tracking and putting out, and one that is pretty interesting as well, because at the end of the day, it is very, very important to get that products per member number up, because that's going to obviously lower customer acquisition costs, and that's going to get them closer and closer to profitability, and that's going to be a very, very good thing overall. Next up, we have this guy just showing how he's been averaging down, and this is really, really crazy to see, and kind of puts in perspective some of the different prices that SoFi has been at different times. I mean, November 2021, again, 4 months ago, he bought 53 shares of SoFi at $21.45. Again, we are at what, $9.25 today? $9.25, and this was 4 months ago. He's buying at $21.45, and this is crazy. Now, obviously, the math, I'm pretty sure, plays out in most cases that if you have a bunch of money set aside, you want to lump sum invest. And yes, in this guy's case, if he did a lump sum investment at 15 or 21 or 14 or 12, he would have gotten crushed. He would have gotten killed. But, this is part luck, part coincidence that the stock has kept dropping and dropping and dropping, and he's been able to buy. But if this is just him, regularly maybe getting a paycheck every couple of weeks, or just, having some more money coming in, he wants to buy and average down, then hey, I think this can be a very, very good strategy if you believe in SoFi in the long run. Obviously this guy, he must really believe in SoFi in the long run. And if he was buying at 15 and 21 and 14 and 12, then absolutely, I think it makes 100% sense to keep buying at $7, $8, and $9. And yeah, he's getting, again, these, 10, 11, 10 that add up to 50 or 100 or whatever. These shares are ultimately still a full share. And they're when this stock's back at 15 or 20 or 30 or whatever, they're still going to be a full share just the same as these shares at 21 and 15 and all that. So he's just able to accumulate more shares for cheaper, lower that cost basis, and especially if it's a company you believe in, and you are in love with the story of and the growth, and you get it all and you understand it at a high level, then hey, that can be a very, very very, very profitable endeavor and investment in the future. But it will be very interesting to see how this tracks out, and how profitable or what the return on these shares is going to be. This guy was doing some math on the shares. He's saying roughly 700. If there's 910 million shares, 35% is held by insiders, which means 319 million. Institutions own roughly 48%, which means 437. So roughly 756 together. Then the short position is 140. Seems like a hole that keeps getting dug deeper and deeper. Some places are saying 37% insiders and 50% institutional. These numbers don't include retail. 140 million buying pressure from covering would really move the stock. Vice versa of selling pressure, which really explains all the killjoys, bank charter announcement, plus earnings all back to red within days. Utilization shows 100%. So obviously this guy is talking about, again, the potential for some kind of short squeeze, the potential that, the stock price or share price or whatever is being artificially held down by people shorting this thing so much, and just kind of, that whole situation going on again. Could there be some kind of short squeeze? Yeah, sure. If we do see some positive catalysts and some positive upward movement in the market or SoFi in general, maybe this thing could go parabolic quickly. Who knows? But this guy just doing some of the math, showing some of the numbers and everything. I know people have questioned some of the exact numbers he's using and the different ratios and percentages and all that stuff, but no matter what, the idea remains the same, that yes, there is obviously a large amount held by insiders, a large amount held by institutions, and also a large amount shorted. And then when you throw in the retail on top of that, like, hey, sometimes the math doesn't start adding up, or sometimes the numbers are very close. And yeah, this is just definitely a heavily shorted stock right now. But obviously there's a ton of heavily shorted stocks in the market right now, but especially one like SoFi that's gone from $25 to $9. Obviously on the way down, there's a ton of incentives to be shorting it and pushing that thing down further. We also have this, people asking what kind of catalysts are upcoming for SoFi. And I know a lot of people are saying, hey, there's no more catalysts. It's just going to be consistent earnings and revenue growth. And I think that's great. That is a good point. But yes, I definitely think this as well. Profitability is going to be a huge one for this company. That first quarter that they are able, to become profitable, but then also the kind of future quarters, like having a couple profitable quarters in a row and showing that you are consistently profitable, and hopefully profitable for the foreseeable future. That is going to be very, very big catalyst. Also, of course, just the student loan loan moratorium being lifted and ending, that will be not a huge catalyst, but I think it'll be some kind of catalyst. Them coming out with options trading, again, not a huge catalyst, but it will be some kind of catalyst. But yes, we've had Bank Charter, we've had Technesis, we've had a lot of the bigger and more major ones coming out recently. So there's not a ton of those like crazy catalysts left. And obviously those haven't even done much for the stock price. They've actually made the stock price go down over the past couple of months. Not that they've made it go down, but they've happened, and the stock price has still gone down over the last couple of months. But there is still some stuff to watch out for SoFi, definitely. We have this guy talking about Technesis a little bit. People overlook dilutions and acquisitions. They're building a puzzle. Just like any other successful business, Technesis would have taken years to build and implement to where it is now. If they did that route, they're giving up growth in those years. Look at how anxious some of you are over options. That's still not out. Look at how delaying the bank charter hurt their numbers. Stop looking at only gives XYZ profits and we paid ZYZ. The intrinsic value brings way more. Every business deal is different. This is why I feel will be way more valuable than told. Market share in other countries and services such as BNPL. Imagine if they needed to dilute for cash. Some of you would lose your minds. I thought that was a very, very interesting point, and I am very curious and interested to see what Technesis is able to do for this company over the next couple of years, not only for the company, but for the share price as well. And then I wanted to end with this. SoFi recommends extension of the student loan pause to 2023 for unemployed borrowers and those earning below 60K annual income. Obviously, this would be a way to, provide some relief to people who are still affected and impacted by the whole COVID situation. People have been laid off, people impacted by the poor job market that we're at in certain industries, certain places, certain circumstances, and those people with, crazy amounts of student debt that may have gotten kind of screwed over in this whole situation, but also still for the people who are in better situations and can't afford to pay and probably should be paying to still allow SoFi to make some money off those refinances and everything like that. So I thought that was interesting, and that's kind of what SoFi is recommending at this point in time, but we'll have to see how this whole thing plays out because at this point we really have no idea. But that is pretty much it for this video today, guys. Definitely drop a like if you did enjoy it. I would appreciate that so much. Leave a comment down below letting me know what you think about SOFI. I'd love to hear your guys' thoughts and opinions. Subscribe, stay up to date on all my latest content. Hope to catch you guys in the next one. But until then.